Hello and welcome back to the Financial Freedom Show. In today's episode, we're going to be talking about what is SCHD and why I'm buying it in my portfolio. So as you can see, my account balance has dropped quite a bit in Fidelity. It's because I took out a large deposit to send to my wife, and she's going to pay off the rest of her car payment. So that's going to be completely gone. And then the only debt that I'll have left as a couple will be our mortgage, which I've posted another video recently about that, about how I'm planning to pay off my mortgage. So check that out in the description if you can. But going forward, I'm going to be contributing more to my mortgage than my investment account. I will still be contributing to my Roth IRAs, so that's going to be posted on this channel as well, but most of my videos are going to be focused around either new investments that I'm considering or paying off my mortgage over time. So as you can see, my balance has decreased recently. As I said, I've pulled it out for my wife's car payment. So in this video, we're actually going to discuss SCHD and why I'm investing in it in my wife's Roth IRA and what I plan on doing with SCHD in the future. So if you enjoyed the video, please be sure to give it a like and comment down below what you're buying in your portfolio. Love to read the comments. Without further ado, let's get into today's video. So SCHD is the Schwab US Dividend Equity ETF. This ETF is created by Charles Schwab, which is a well-known financial services firm. So SCHD is designed to invest in a group of U.S. companies that have a history of paying high dividends. A dividend is a portion of a company's earnings that it pays out regularly to shareholders. By investing in companies that pay dividends, SCHD aims to provide regular income to its investors. Why would you invest in SCHD? There are several reasons why SCHD might be a good choice for beginner investors. The first reason is income generation. SCHD focuses on companies that pay dividends, which means you can earn regular income from your investment. This is especially attractive if you want a steady stream of income without selling your shares. Number two is diversification. By investing in an ETF like SCHD, you're not putting all your money into one company. Instead, your money is spread across many different companies. This can help reduce risk because if one company doesn't perform well, it won't have as big of an impact on your overall investment. Number three is low cost. SCHD has a very low expense ratio, which means it doesn't cost much to own. Some investments charge high fees, but SCHD is designed to be cost effective, allowing more of your money to work for you. And number four, it's easy to invest in. You can buy and sell SCHD just like you would with any regular stock. This makes it accessible and easy to manage with any brokerage account. So if we take a look at SCHD's prospectus, the investment seeks to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. To pursue its goal, the fund generally invests in stocks that are included in the index. This is designed to measure the performance of high dividend yielding stocks issued by the U.S. companies that have a record of consistently high paying dividends, selected for their fundamental strength relative to their peers and based on financial ratios. So as we can see, SCHD currently has a total of 103 holdings overall. The top 10 holdings are Texas Instruments, Chevron, Lockheed Martin, PepsiCo, Coca-Cola, United Parcel Service or UPS, Verizon, Amgen, Cisco Systems, and Pfizer. So as you can see, 51% of the market capitalization is large cap, 27% is medium cap, 15% is giant, 5% is small, and 1% is micro. And most of the holdings are North America by 99%, so a large majority of the fund is in North America. And this is a passively managed fund, so currently we'll talk about the expense ratio. As you can see, the expense ratio is currently 0.06% as of today. So what is the expense ratio? This is a fee that the fund charges their investors for the costs of managing the fund. This fee is expressed as a percentage of the investment in the fund. So for example, with this 0.06% expense ratio, it means you'll pay roughly 60 cents annually for every $1,000 you have invested in the fund. So it's very low cost for SCHD. And they pay a regular dividend. The last dividend amount was 61 cents per share, but it continually goes up over time with an annual dividend percentage of 3.47%. So that's the annual yield on the fund so far. And it's constantly increasing, so they're always raising their dividends. It's not perfect, as you can see by this chart over time. It's roughly up and down in the short term, but over the long run, dividend payouts continue to increase. So if we talk about the total returns of the fund, for the life of the fund, SCHD has returned 10.78%. While SCHD has many benefits, it's also helpful to compare that to other investment options to see if it fits your needs. If you're younger in age, it's probably better to have growth stocks just because those will have a larger overall return in the long run. But SCHD is better for people who are closer to retirement, who need that income, that monthly income that's generated by dividends. Investing in individual stocks can be risky, so SCHD is a good fit for those who don't want to risk investing in single stocks because your investment is concentrated in a single company. SCHD offers diversification and reduces this risk. And selecting individual stocks requires significant research and expertise. SCHD simplifies this process by providing a pre-selected basket of dividend-paying stocks. SCHD typically also has a lower expense ratio than many mutual funds, making it a lower cost-effective option. It allows trading. It can be bought and sold throughout the day, whereas mutual funds can only be traded by the end of the day. And ETFs generally offer better tax efficiency compared to mutual funds because they're not trading in and out of stocks. They have better tax efficiency. While other ETFs might focus on growth stocks, international markets, or specific sectors, SCHD is designed for investors seeking dividend income from U.S. companies. Its low expense ratio makes it more competitive than other ETFs. You should always be comparing your expense ratios to ensure you're getting value for your investment, even though that shouldn't be the sole reason for choosing a fund. That's a very important reason for deciding which fund you're investing in. So in conclusion, is SCHD right for you? SCHD is a compelling investment option, particularly for those seeking regular income through dividends and a low-cost, diversified portfolio. Its focus on high-quality U.S. companies with strong dividend histories make it an attractive choice for both beginners and experienced investors. However, as with any investment, it's important to consider your individual financial goals, risk tolerance, and investment horizon. SCHD can be a valuable component of a well-rounded investment strategy, but it's always wise to diversify across different types of investments and asset vehicles. By understanding the benefits and characteristics of SCHD, you can make informed decisions and build a strong foundation for your financial future. Whether you're looking to invest in new funds or looking to enhance your portfolio, SCHD offers a straightforward and effective way to achieve your financial goals. So if you enjoyed today's video, please be sure to give a like and comment down below. Are you buying SCHD in your portfolio? And let me know in the comments. And I'll see you next time.